But Mikso Das is Asia equity strategist at JP Morgan. He's now joining us to take some questions. Mikso, great to have you with us here. Thanks very much for your time. Uh, just talk to us a little bit about are there any signals in particular which this plunge in oil and the plunge in yields is sending our way? Or this is just a, overreaction to an earlier upward overreaction?
I think this move was a little bit tactical in that sense. And if you look at global price action, right, pretty much everything is being dominated by liquidity. And liquidity in global markets, again, has been dominated by what's happening in the treasury market, supply demand in that space. And you can see very clearly demarcated that when the July QRA happened, when the Treasury made its quarterly refunding announcement, that's when markets started to break down. Risk assets fell, bond yields surged and all of that because liquidity started to tighten. And the same thing happened at the October QRA when the Treasury tried to shift the balance a little bit more, and that eased liquidity conditions. And we've seen basically everything rally ever since then. And that goes on. The only thing that has not been rallying and that has helped equity markets in the sense that it brings down inflation expectations is the decline in oil prices, which you also mentioned. So you put all of these things together, and it's kind of a Goldilocks for equities and risk assets overall, where bond yields are declining. Keep in mind that we are still in a very inflation-driven cycle, which means that equities and bonds are positively correlated. So when bond yields decline, equities do well. And given the fact that positioning in the S&P, in the US equities in particular, by the end of October was extremely light and very, very short. So it's not surprising to see a bit of a short covering rally here, which has been helped by this liquidity injection and has been helped by the decline in inflation expectations because of dropping oil. That translates into Asia, and of course the dollar has softened from its peaks a little bit. So all of that plays very well into the Indian market as well.
And the timing is just right, Mikso, because we are in Diwali season, peak festive season, and you want to see the markets in a good mood as well. Do you think there's more to go in the rally in the Indian markets? And how are you positioned? What's your view on India in the context of most emerging markets globally?
Right. So I think there's a tactical aspect to it, which obviously is going to follow whatever happens in the U.S. market. So if the S&P has, or U.S. equities have further room to run from here, which does look like the case, then Indian markets will be supported by that. But even beyond that, the main case that we've been making to our clients is that India is a market that looks extremely attractive on a structural basis. So even when we do get periods of tactical pullbacks and uncertainty in the market, we kind of see those as opportunities to buy rather than opportunities to significantly trim exposure. Just to give you an example, we recently did some work on positioning for EM and Asia ex-Japan investors. And what we find is that India is a market where the breadth of holdings, so relative to benchmark, which has only about 120 stocks in India, investors in EM and Asia Japan funds hold almost 300 different stocks in the Indian market. And this just goes to show that the market is basically maturing from a liquidity perspective, from a breadth perspective, from a sell side and fundamental coverage perspective, investor participation, and all of this kind of forms a virtuous spiral, which will take the market higher over a long period of time.
Hi, Mikso. Good morning. Good to hear your views. Mikso, what about the toss-up between India and China? Because structurally, India is looking good. But tactically, in the near term, do you see a case where China could outperform, say, for the next 6 to 12 months? Because India has its set of worries, right? We have a big election, state elections, central elections as well that are coming up. And valuation-wise, we're trading at a big premium. Your take?
That's right. So there is definitely, if you look at India versus China correlations, they have been falling over the years, really since 2013, 2014, we've seen this correlation decline in terms of price action, in terms of macro revisions, in terms of flows. All of these correlations between India and China have been negative. And you're absolutely right that in the near term, we do see a very credible case for a China equity bounce, which we think can last into January before we need to reassess that. And in that context, it will put some downward pressure on India. But if you look at our allocation at this point, it's actually overweight both China and India. And we mention it as China being a more tactical overweight, whereas India being a more structural overweight. The point you make about the elections, that's true as well, that we do get a lot of investor feedback worrying about the state election results that are coming up next month. But we did some work on this, and I'm sure you're well aware that the state election results historically have not been a very good predictor for national election results. And from our perspective, it's really the latter that we care about. So if we do see any sort of volatility around the state election results, which, when that happens, we would, again, rather be using that as an opportunity to get back into the market.
All right, Mixo, we've run out of time, not out of questions, but have a great Diwali and festive season. And thank you for joining us on CNBC TV 18 and giving us your views.